Aside from the presidential election, which takes place on Tuesday the 3rd of November in America, we have two big macroeconomic events coming in the week ahead, one on each side of the Atlantic. On Thursday the 5th of November, bonfire night no less, the Bank of England will announce its latest monetary policy decision. Governor Andrew Bailey and his colleagues on the Monetary Policy Committee have been publicly debating the merits of taking interest rates into negative territory, while running quantitative easing, QE, at record high levels. So, monetary policy is as loose as it has ever been, and the Bank of England is currently showing no desire to tighten it, with uncertainty over Brexit, as well as the pandemic and the fragile nature of the recovery from the first half's recession, both reasons why. Economists don't necessarily expect the MPC to change policy at this, the penultimate meeting of 2020, but with local lockdowns in place, and likely to hamper the economic health of the country even as they try to protect its physical health, and with inflation still miles below 2% targets, there may be a chance that it does act. The sages at Capital Economics, for one, believe the Bank of England will add another £250 billion to QE by the end of 2021, and that they could start doing so at this very meeting. Although, why the Bank of England should perhaps be willing to try more of a policy that's failed to deliver for the last 11 years is an interesting question. Anyway, just to remind you that at the moment, the headline base interest rate is 0.1%, and QE stands at a total of £745 billion, dating back to its introduction all the way back in 2009. On the other side of the pond, the first Friday of the month means non-farm payrolls. So on the 6th of November, we'll find out how many jobs America created and how its unemployment rate changed in October. After a truly awful spring, when 20.5 million jobs were lost in April alone, America started to claw its way back, as lockdowns have eased and the economy started to forge an upturn. In September, 661,000 new jobs were added, to take the total to 11.4 million recaptured since that shattering one-month loss, and that's taken the headline unemployment rate below 8% from a peak of near 15%. However, the pace of improvement has been slowing, so let's see how many jobs October brought. There's plenty to mull over on the corporate front as well. The third quarter reporting season in the USA is drawing to a close, but a good number of large, mid and small cap firms are due to release results or a trading update here in the UK. Names which may be worthy of further research include the following, although do note that some of these dates may still be subject to change. We've got non-life insurer Hiscox on Monday the 2nd of November, Primark owner Associated British Foods, packager DS Smith and engineer Weir on the 3rd, Marks & Spencer and construction firm Morgan Sindall on the 4th. They've got a bonanza on the 5th, fireworks night, with Auto Trader, RSA, Sainsbury, Derwent London, Hikma, Aveva, Superdry and TI Fluid Systems, before we finish the week where we began, with a Lloyd's insurer, this time Beazley, on Friday the 6th of November. But for me, the company that may be capable of causing the biggest fuss in the week ahead is the pharmaceutical giant AstraZeneca. The FTSE 100 member is due to release its third quarter results on Thursday the 5th of November. As you might perhaps assume during a global pandemic, the drug company shares have done rather well, rising by 20% over the past year, during which time the FTSE All shares fallen by around a sixth. However, AstraZeneca is also right in the vanguard of the fight against COVID-19, having announced in mid-October that its COVID antibody treatment, AZD4772, had entered Phase 3 clinical trials, helped by $486 million of funding from no less than the US government. This trial, the final one before commercial approval could be offered from regulators, assuming that all goes well, will enrol around 6,000 patients all around the world, and analysts and shareholders will no doubt be looking for any updates on that. AstraZeneca's wider drug pipeline will also be of keen interest. The Cambridge-headquartered company has 37 treatments in Phase 1 trials, 45 in Phase 2 and 11 in Phase 3, across its three specialist areas, which are, first, oncology, second, cardiovascular, renal and metabolism, and third, respiratory and immunology. Now, the pipeline's key as far as the future of the company is concerned. Remember that at the first half stage, 10 drugs generated $4.6 billion of sales on only 3/4 of the total, and 3 of them actually showed drops in revenues as they're off-patent and open to generic competition. They were Pulmicort, Crestor and Nexium, and they were down to 12% of Q2 sales between them. The good news came in the form of strong sales of new drugs like Tagrisso, Imfinzi, Lynparza and Farxiga, as well as Symbicort, which between them provided $3 billion of sales, or just under half of the second quarter total. Beyond the granular detail on products, analysts will then look to how the Q3 results stack up against the full-year guidance given by Chief Executive Pascal Soriot whereby AstraZeneca currently expects the following for 2020. High single-digit to low double-digit percentage sales growth. In the first quarter, it managed 16%, in the second 8% on a stated basis. And mid to high teens percentage growth in what it terms core earnings per share, or core EPS. And that it excludes restructuring expenses, amortization and impairment of intangible assets and other items. The numbers do jump around a lot, but core EPS rose by 31% in the second quarter. For the full year, the analyst consensus is looking for a core EPS figure of around $4 a share, compared to $3.50 a year ago, for a growth rate of 14%. I hope that you and your families are all in good health and good spirits during these difficult times. Thank you for listening, and I look forward to talking to you again next week.